Okay, and I kind of like told my wife, I said, now think about this for a minute. You say you and I subscribe to a guy on the internet, okay? And yes, you've seen where I've been right. But recently, everything I've been picking is pretty much wrong. And I've said to you that the market conditions are not aligned for me to work as I would normally work. But you're in a mentorship and you're being expected to pay and you're getting lessons, but I can't really fruitfully apply them in the market as I would if I was trading with live funds and pushing it. So I told my wife, I said, look, I got to be fair with these people because I would want this done to me. Number one, I thought that I was going to have a lot more backlash because of all the stuff that was going on online, but I've only had really just two people, and it's ones that already tried to get their money back before, and they're trying a different approach. So either one, you haven't done it yet, or I'm probably exaggerating my concerns about it. So here's what I thought, and I'll leave it up to you as the community to tell me what you want to do, because I'm flexible either way. I told my wife, I said, look, the markets are really screwed up right now, and I'm confident this fall it'll smooth out. And she and I had talked. She's looking, you need to wrap this up. You need to get back into the family, and this has got to be it. So I committed to her that September, when we finished that month, that was it. And I would be periodically once a week just touching base with you. And she thought that was fair. But I tried to explain to her in our conversation just about the market and how it has to be in a line for certain things to work to make it high probability. As best as I could for her to understand it, she and I agreed that if you all were comfortable, because I've given you a lot of content, and we're going to new content every month. You're getting the lessons, and you're not really getting to see too much of it applied. So there's a gap, and it would be unfair for me as a merchant. It would be unfair to me as of me to be a teacher expecting you to understand it fruitfully without really going through it and having a market environment that builds that understanding. Because once you see it one time applied, then it's like riding a bike. But we don't have that right now, and it's frustrating for me as a teacher because I need that to see this stuff be applied. And then once you see it, you'll have experience with it, and you'll know exactly what you're supposed to do with it. So I don't think it's fair, and this is be real honest with one another, I don't think it's fair for me to ask you to pay me when I can't really apply it in the market environments for the last couple weeks, the last 2 months. So she and I discussed it. I said, look, would you be willing if the community would agree to this? Now, I'm not saying it's going to be this way. I'm not saying it's not going to be this way. I'm going to let them, as a collective whole, determine what we're going to do, because I have to make changes to the terms of use to make this happen. And if I can avoid it, I'll certainly do whatever I can to not have to do it. But I'm willing to listen to you as a community because you're paying for me, you're trusting me, and I don't want to mar that trust. I think it's very hard to earn trust. And I've been honest with everyone in here. You all hear everything that's truthful. I don't exaggerate anything in here. I don't show you anything it's not truthful. You see when I'm right, you see when I'm wrong, and I tell you when it's not high probability. And it is what it is. So when I asked my wife, I said, look, would you be willing to be more flexible with me and allowing this project to go into the end of November, should it need to? And now this is the reason why I said this. There's a lot of questions that some of you have that are, they're realistic. They're not out of the norm. But some of you are asking questions that I can't really give you responses to because I can't apply it to the market right now. And I know that's what you're wanting, and guess what? That's exactly what you should be expecting. And I can't apply it to present market conditions because it's doing whatever it wants to do. Everything's going in the opposite direction, so there's no market symmetry. So when there's a lack of market symmetry, you already know that's the number one rule. We need that to have high probability. So if there's a lack of high probability conditions, I can't literally sit down and say, okay, here's what you're going to do, and this is how it works, and it's easy, and there it is. There's nothing to worry about. Because we don't have that condition right now, I would be willing to spend the next 3 months, June, July, and August, going into greater detail with what's already been taught. You do not pay for any of that, okay? You don't pay for okay? You don't pay for any of that. And then after that, when we get to September, when real typically seasonally, September, October, November, they're really good months. but the last half of November really isn't. But they're generally really good months. Plus, it'll have the opportunity for us to sit down and we'll be able to outline the entire final quarter of the year, which I was going to do anyway, but we'll be able to work with it, and you will see me doing it in better market conditions. And that's what's been lacking. So it would be wonderful for me to be, just sit back here collecting your money and say, here's your lessons and good luck and I hope you find it in the future. But I don't feel right doing that. As a person, I don't feel right doing it. As a teacher, I don't feel right doing it. And as a merchant, to be completely satisfied, as if I was the buyer, I would really appreciate that. Now, some of you aren't going to want to do this. I already know this. You're not going to want to do it. You're going to stick to the schedule, Mike. Let's get done. And I understand that. Some of you all want to do it, in a weekend, and I can't do that either. But a lot of you have questions that are best answered with applied use of the content. And because of the conditions in the marketplace right now, I've not been able to, and this is real world. You cannot force it to happen. So I can't just say, because I understand the concept, I know it, I've used it, I'm going to force it in the marketplace and the market's going to bend to my will. It doesn't work that way. And some of you are so new that you can't appreciate that. So it's a big chasm between your understanding presently and what you need to understand. And it's going to sound to some of you like it's smoke and mirrors, but it's not. I'm being legitimately honest with you. I'm telling you everything up front and explaining why it's not working. You see it once in a while works. Last week we had an Aussie. It was to the pip. It went right up to the level of 74.30 and dropped right off of that. It went down and closed to fair value gap on a daily. That's not normal. That's not normal to see inconsistencies like that for me. I thrive in those environments where it's highly lucrative to get in and out, and the markets are moving one way. It's symmetrical, nothing to worry about. So I'm not going to talk anymore about it like now. You pretty much got what I proposed to you. I'm going to put a post on the forum, okay, in the May thread, okay, and you guys can vote on it. You decide how it is. Majority is going to win, and it is what it is. I want you to be satisfied. I don't want you to feel like, number one, I don't care, because I absolutely care. I want this to be fruitful for you, and I want it to be a good experience for me, because I want your feedback. When this mentorship ends, I'm looking for continuous feedback from you all. What you're doing with it, how you're succeeding with it, what you're doing with your profits, all that. I want to know what you're doing with it. I don't ever want to see anyone feel like, number one, that I've scammed anyone. I don't believe I've ever done anything that would be considered scamming. The level of energy it takes to do this stuff, it's a lot. It doesn't seem like it because you're just watching a video sometimes. But there's a lot of stuff that's going on behind the scenes and a lot of involvement. And I told my wife, I said, right now I'm running a business and I've asked them all to allow me to be a real person. And some people just don't think that that's possible. Like, you think I'm a, automated, artificial intelligence, like I don't have a family and I don't have real things going on in the world. But some individuals recently have upset my family, not me so much, because they don't know where I live at. They don't know anything about where I'm at or anything. But my wife is concerned, and I have to respect that. So I've asked a lot of my wife, over the weekend, and she's in agreement with the alternative, where we spend the next 3 months. You don't pay. We just work in great detail what's already been explained. And then we pick it up again in September, should you all collectively decide to do this. If you don't want to do this collectively, whatever the majority says, we're going to go with that. But I want to be fair and make myself available to that flexibility. I don't want to say this is the way it is and you just take it the way it is. Because in the beginning, that's how it kind of was. But because the market conditions, the way they are, I don't feel right doing it this way. As a person, I don't think it's right. And if I was a sleazeball, like some people are trying to paint me as, I would just sit back and keep collecting your money and just wish you all good luck with it all, and there it is. But that's not how you learn it. You got to have it applied. You got to see it. And if I can't apply it in my own trading, it kind of like goes without saying, you can't do it even in a practice setting. So you don't have the conditions to work with. So like I said, I think it was last week or week before, I wouldn't be trading right now. I would be forcing myself to about the middle of May to see what happens in the marketplace. And then I would look to see what the market gives me. But either way, I'm committed to your learning. I'm committed to your satisfaction. And I want you to all know that, number one. And I want to fill every void that you have in terms of your understanding about all the content. Because I don't want anybody upset. I don't want anybody to feel like 30 days after they're done, they didn't have an amazing experience and grow as a trader by way of being a part of this. That's the number one goal. I want you to be satisfied. I want you to be empowered. I want you to be able to use the information. Not just, oh, I was there, I experienced it, but I really don't know what I'm doing with it. That's not what I want. I want you all to have a free field wide open in front of you and what direction you want to go. You want to go into managed funds. You want to go into, run your own account. You want to go into signal services, whatever. You'll be confident to do that. But I don't feel confident as a teacher and as a mentor that given the last 2 months, it hasn't really been good for me. It hasn't been good at all. So I can only imagine what it's like for you as the student because you're purchasing. And some of you are actually making great sacrifices to be here. And I'm not oblivious to that. 150 to me isn't a lot, but some of you have to work, to get that 150 to be here. And I certainly appreciate your willingness to do that, but I also am a human being too. And I want to be sensitive to the reality of right now, I have not been able to put this information to work where you can see it effectively. Not because it doesn't work, but because the conditions that would keep me on the sidelines otherwise, that's what we're seeing. So anyway, that's enough of that. So we're going to go through the charts. I'm going to give you some new levels to go off of. We're going to go down from the monthly to the weekly. We're going to do this on the dollar, the euro, the pound, Aussie dollar, and US CAD. Okay. So we are going to go over to the dollar first. All right, do me a favor real quick. Can you still hear me? Okay. As a final remark about what I just rambled on about, in the post, I'm going to give you the proposed schedules. You guys decide which one you want to go with, okay? I'm going to do 2 separate posts. I'm going to do a post where it gives us the outline as it is right now, and I'm going to give you the outline that would be an alternative. Should we have to spend the next 3 months together? You don't pay, you get caught up, everything has been taught, you'll have a better understanding of that. And then we can go into the June, July, and August templates. And all you have to do is like. If you like that post that has the outcome you want to see for the remainder of the mentorship, the majority wins. Whoever has the most likes in that post, in other words, if there's more likes in one post or the other, the one that has the most likes, that's the schedule I'm going to go with. Okay, so just be aware. And that's it. All right, so yeah, maybe I can do a post, a survey. No, what is it? A poll. I think if I'm not mistaken, I think our forum permits a poll, but I haven't done one yet. So SQA saying we do have one. So I'll get with him in a private message in the forum, and I'll let him set that up. And if it's not in the format I want, then I'll let him know at the time of its posting, and we'll make that arrangement. But it'll happen today because I want to know what everyone's thoughts are, and I'll leave it up for this week. So I know some of you are not going to be watching it today. You'll be getting to it later on this week. So I'll leave it up till this coming Sunday, and whatever the final numbers are on Sunday, that's what we'll go with. That's the direction we'll go. Okay. All right. So I'm going to make this little question box go bye-byes for right now, so I can focus on the charts. Okay. And all right. So we have the daily here. Let's go out to a monthly. Get a fresh perspective on everything. I need one myself personally. All right, so we are down into the last 3 down closes on a monthly basis. So we're inside of this series of will be deemed as a complete bullish order block. Went a little bit deeper into it, touched the top of this candle here. We have that level, and we have a fair value gap in here that I'm going to show you again when we go on the daily. No gaps down in here. We have an overlap of this wick on this body here, so if this wick didn't happen to come this low as it is here, that would be reason to expect this market to go lower. Because we have no gap in here, the only draw on price would be the sell stops below this low or below this low, okay? And or the mean threshold of this entire 3 down close candle series. So that would also put us around in here, around the tops of these candles in here. So I don't think that's there yet. It could, but I don't think there's evidence to support that yet. So we don't have anything outside of the order block here, which again, I don't see that as a real strong level to look for because we had this touch again. This open on this candle in this month, it traded down, hit the body of the candle as well. We already traded there. So if we drop lower, I don't think it's going to hit that to go higher. I think it would make a run for the sell stops below here and make a run below here and then maybe eat into some of this up movement. Again, I don't see that. I think there's going to be more likely to see an attempt to rally. Whether it continues and makes a new high, that I don't know, and we don't need to have that on a monthly chart to be finding an opportunity. But we have the monthly's high at 103.81. So we have that to work with. And then we also have this last up close candle. Okay, so this month we've already opened and traded up into it. And we're slightly off of that, but we're going to go down into a weekly. Now we have these 2 down close candles here, bullish order block, and we worked inside that. We also had a little bit of a gap that has been closed right in here from this candle's high and this candle's low right here that comes in at 99.22. So buy side delivery has been offered from this candle's high up. It tried to come down to a little bit, not much. So we close in all that here. So far for the week, we're looking slightly positive. Potentially could see a swing low form here. Ideally, that'd be great because then we can make a run for the rejection block above these candles. It doesn't need to go above these wicks. It can just come right up above here, and that's enough to trade off of. The daily okay, we have this down close, this down close, this down close, this down close. This all is a one order block, and its high comes in at 98.46. That's why I have 98.46 identified here. I have this candle's high identified at 9800 big figure because we have a small little fair value gap in here, only buy side delivery there. So if we do drop down here, say we respect this last up close and we can't climb any higher, we'll probably want to see it go lower just to go down to the 98 big figure. I think then we'll get a buy there. But right now, it looks positive for upside because we've already cleared out the sell stops below here. We hit a level, bullish order block, we showed responsiveness, and the low actually comes right to the pip at 98.46. So we had some responsiveness there. I think that we'll probably want to make a better attempt at closing in that gap. And apart from that, we don't have really much in way of a fair value gap until we get up into here. And that's enough to, to come in and close in, but no other gap because this low close has overlapped this down wick here, and we rebalanced here. So there's no real gap until we get up into here. So I'm not going to draw any analysis on that, but just keep that in your notes that on your own charts to keep mine clean. I'm just going to make a mental note and audibly tell you that this is the fair value gap on the upside. And it's already been rebalanced at this point here. But I think that we're most likely wanting to see it go into this gap a little bit more. We've made an attempt to clear out the sell stops here. Logical bullish order block here that began on this nice run up. If it does drop again in this week, we're going to be watching that 9,800 big figure. Otherwise, we're looking for the gap closure. And maybe over a period of time, I don't know how long it's going to take, but we're looking for that gap that's been outlined here. Euro, we gapped up, completely closed in the fair value gap that's outlined with this candle's low, this candle's high. That's what I'm identifying here. So this red level up to here, all that is fair value, and it's been rebalanced, and now we're coming off of it. Gotta be mindful of this last down close candle here. They may want to punch it one more time higher. I don't see it there, but you always have to be mindful of that. So if we look at that level here, we're going to go out on top a higher time frame and see if there's any overlap with that. So let's go out to a monthly. Just power this level here. Didn't quite get that gap in here closed. So that is potentially one more that could, if we do trade lower, that could be one to watch for, a 101.70. We did come up into these last up close candles right here. So that low comes in at 109.53. So we dipped into that a little bit more. Again, no gap in here. No reason to want to come back up here, not on a monthly basis. So again, we've cleared out the sell stops below here. We have an obvious gap that I think personally needs to be rebalanced. And we had the French elections complete this weekend, and I expected some kind of volatility on the open this week. I don't know much about the folks that are, over there being elected and who actually got elected, but this I do know. The headlines are stating that the gentleman that won the French elections is in support of keeping them a part of the European Union. So that should be, in my opinion, it should be bullish. That's the way I would interpret it. I wouldn't view it any other way other than that we could see price trade higher on the euro. So we have that area up in here to watch on a monthly basis. Too tight of a range in here to work with many of the normal PD arrays. So when it's in a consolidation like this, we identify the lows and the highs, but we can see that on a daily and a weekly chart. So it's not necessary that we draw that much of attention to it, but we do want to identify where the price may want to draw up onto. We had a low here, an attempt to go lower, rallied up, it didn't break a market structure high, went lower, cleared out the sell stop. So now we're going to be watching to see if this market wants to go above a swing high. On a monthly basis, that swing high would be here. So the high you have to be watching of importance, in my opinion, is the 113 big figure. Okay, so we're going to look at 113 big figure. We'll dial that down into a weekly chart, and on the lows, we'll be able to see that on the weekly. All right, so we have the 113 big figure right here. So if we get above that, obviously there ain't much range before we get here. Old high here, fair value gap right in here as well. So where we're at, we're in equilibrium. The high and the low, we're right in the middle of that. So if we do see bullishness on euro, and say the argument is made that we see a continuation throughout the rest of the year that euro wants to rally. Okay, say the dollar index does in fact weaken. This could be the November goal, where we could see price trade up into the 119s again between now and November, maybe going into mid-December. We have a lot of fair value draw on price that could bring us up here. We have the open gap here. We have all of this gap in here. and it could go up there just to go lower longer term. You know, it would be a real big reach for large funds that have stops above these highs up here at August 23rd, 2015 highs. If they come above that, they would be able to take out a lot of liquidity in the marketplace and then reposition for much lower prices, and say the dollar strengthens. And we do see what I think longer term is going to be parity on euro and dollar. It might be good news for euro over the weekend because of the French elections, but that's just one country. I think ultimately the euro is doomed. But again, that's just my own soothsaying. The daily, let me make sure one more time looking at this weekly. Yeah, we cleared all the gap in here. This candle's low on, what is that? October 23rd, 2016. We close in that gap on a down candle here on November 6, 2016, and this candle's high on December 4th, 2016. So you had a fair value gap, only sell side delivery was offered. We rebalanced that, went again up into the last close, up close candle on October 30th, 2016. So that's why we're pausing in here. The daily, you see we had that fair value gap that we outlined. The only one that has obvious appeal to me is, much like we saw with the dollar index, that gap above us for fair value. This, to me, it needs to get rebalanced. I mean, there's just no way around it. It needs to get rebalanced because we're in between a big rejection back here during the elections, and we have the 2016 low, and now we came up and rebalanced here. So notice we stopped like a brick wall. We hit it. We opened up and then quickly rejected all that away. So I think personally that we're going to make an attempt this week or next to go down into this gap. So work on these higher time frames. I'm usually pretty accurate. So I think we're seeing evidences of the beginning of this event unfolding. Now, once we get down to this gap, I admittedly have no idea if we're going to continue lower or if we're going to use that as an area to continue going higher. I'll have to see price and what every other market in the asset class is doing at the time. But right now, I think it's fair to anticipate this gap here from a few weeks ago, that closing in, because now we have the election behind us. That would, I think, have all the impact. It's already done. It's in there. It's already factored in the marketplace. So now they opened it up and they've faded the gap opening from Sunday for this week. So I think if we lose this order block here, the last down close candle on May 3rd, 2017, if we lose the mean threshold on that, we're definitely going down to make an attempt to close in that gap. And that may be a good scenario to work with and use some of the tools that we've been teaching. So I'll be looking for that. Let's have it on our charts now. I'm just going to use the wick lows in here for now. And as we get closer, we start to break down. I'll adjust and refine that to a greater detail. But if you take it further, look back, we have this over here as well. So even though we gapped through it, buy-side delivery has not been offered all through here. So that's really, in essence, the best form of the gap right here. So we have this candle's high, 107.77, and this candle's low, 108.02. So we have that area for it to be rebalanced. So price can come down, hit that level, and then essentially it's all done. It doesn't need to go down any lower than that. So we're going to be watching specifically this candle. Note your gap's probably going to be looking a little bit different because I'm certain you're looking at your live feeds, but look at April 20th, 2017. That candle's high on the daily, and you'll get the fair value gap closure. That's the only parameter that needs to be hit to do a fill-in. Doesn't need to go down here and close any kind of closes or anything like that. Cable, Let's go out to a monthly. Much like the euro, I think that we're going to see the potential for lower prices longer term. And obviously there's more news about Brexit later on this year. But here's a scenario for you. Say they take us up into here. Okay, say we get some wild movement up into here, and they give a sell scenario on a daily, and we get some kind of a sell-off signal or a bearish signal. That would be the ideal scenario. I don't want to sell it in here. I wouldn't want to sell this one because I think its underlying strength is being built day by day with this, and I think they're going to try to send it up to that 135 big figure before the end of the year. I think we'll see that. So it's about 500 pips between where we are now and that level. So I would like to be able to find an opportunity to get in here and harvest some of that, but that's the range I'm looking for. But when we get to that level here, I don't see this as a reason to fill in any of that. I think we're going to see this rejection, 135 fair value. Fundamentally, something happened back here, okay, and I don't need to know what it was. I just see it on the chart that they were not willing to see it go lower than that. Now we passed through it, never even came back to it again. We got close to it here, but when we get back to that level here, that's the first return. So there will be heavy sellers at that 135 big figure. So have that in your notes every day as we get closer and closer to 135 on pound dollar. Should we start trading higher? Our attention really going to be focused on that big figure because that's where your next position trade is going to be and swing trade. So have that noted. On the weekly, okay, you can see that 135 10 level would essentially also clear out equal highs. Now on some wild news, okay, because you always have to allow that because we can see some really crazy action on this Brexit thing. Brexit, admittedly, I've said this in the past, it's new territory for me. This whole European Union and, trying to break away from it, all that business. I've never been one to claim to understand all of the ramifications about things like that because it's highly fundamental. So, and again, fundamentals could suggest one thing being bullish, but the opposite is being seen in the marketplace. So that's why I don't have a lot of faith in it. I can trust price. Price will tell me immediately if I'm right or wrong. Fundamentals, who knows if I'm right or wrong. So I don't know what the Brexit stuff's going to do. I get a lot of emails, every week, what's going to happen if this happens, if that happens. I'll just answer it blanketly here. I don't know. I really don't know. I'm going to look at price action to tell me what I think I should be doing in terms of trading, but I don't know what the outcome's going to be, and I don't even know what the outcome response will be. So I don't know. So it's all a new experience for me as well. So again, that 135.10 level, that's a real nice level for swing and position trading, potentially for a short, take out the equal lows here. So we do have a small little fair value gap also existing right above us on the weekly. We have it in here, sell side delivery only offered right in here. So we could potentially see 132s. Let's see what that low is on here. 132.42. So we could see it could spike up into 132.50, but we see a draw on price up into 132.40, and the beginning of the gap would come in at 131.18. So nice round number would be 131.20. So there's your two levels to look for as an upside objective for cable. And let's go down to a daily. Okay, so daily, much like we mentioned with the euro earlier on its daily chart, we have this last down close candle in here. Be mindful of that because it could try one more time to send it higher off of that alone. So we have that here, so be careful about that. We have the mean threshold to watch for. We already hit that essentially here. This opening went down, mean threshold, last down close candle, and then response. So we're coming back down. We're going to demand that it shows responsiveness at the open of that down close candle or bullish order block. So on Forex Ltd's platform, be mindful of that 129.40 level. It should show responsiveness there on the upside. If it doesn't, we're going to start rolling over and going lower. And we have a really nice liquidity void in here. Okay, so let's identify that. This could come down and close, not entirely, but we can close some of that, okay, and leave a portion of it open and then still rally up. So don't think it has to come down and completely close that in. Don't think that at all. But should we break down below this down close candle, I don't think we're going to find support at this one because we've already seen it there. Let me have that on your chart so you can see why these order blocks have already been, in my opinion, already been consumed. So we had an order block here down, rallied through, came back, hit it, rallied away, traded through the high of this down close candle, and now we're watching the open on this candle right here. Again, that's 129.40. The reason why we're not looking for support at the mean threshold is because we've already seen this candle open, trade down into it. Now, I know some of you are thinking, well, isn't the order block only valid once we trade through it? Yes, but we're also now looking at a level that's already been worked on. So if we see this ever, even though that we traded through it here and validates this as an order block, we already seen responsiveness off that mean threshold there. So I don't have any confidence. Should we trade down below the open on this candle, that is enough for me to say, okay, it's not a high probability candle. The first return or the first response off of a level that we normally see bullishness or bearishness, the open, the high, the low, respectively to the bullish or bearish order block. Those are our two scenarios, bullish or bearish. In other words, on down close candles, we're looking for the high or the open to be the best scenario for a buy. For up close candles or bearish order blocks, we're looking for the low or the opening for the best sell scenarios or best responsiveness for resistance. The last line in the sand or defense is that mean threshold. If we ever see a response off that level, it's already been worked here. And that's why we saw the movement here. That validates the order block, yeah. So it only needs to come back down and hit that. So have that in your notes. It's one of those August type things that would have came out later on this year, but as it's being shown in the chart, that's the reason why I would not expect any respect of the mean threshold. So if we lose the opening on this down close candle, we're going lower. So let's go over to the Aussie dollar. Aussie dollar had a really nice move. Yes, last week. Hang on, let's go out to a monthly. All right, so this bad boy has been in a monthly consolidation for a while, a long, long while. And I think that everyone sees in a classic format, they see an ascending triangle. And I'll draw this in here so you guys can get the gist of it, since you probably don't see those things normally looking at price, because you're looking at order blocks and things of that nature. Something to that effect, okay? So folks are going to be looking to do all kinds of measurements and all that business and draw it up here. So 0.8865 to 0.88 to 70, that's where classic chartists are looking for. I'm not suggesting that here, but that's what they're seeing. And what I look at is there's going to be folks that have that trend line idea, whether they see that triangle or not. They're going to have this going on their monthly charts. So you know what they're expecting when it gets down to here. Okay, they're going to be looking for it to go long and go higher. Plus, they've already formed a potential continuation pattern for upside. And we've had a nice run below the sell stops here, but there's been no real attempt to go higher. Each high has been lower, 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 and now we had a real nice move lower. How we trade inside this last down candle right here is going to be important because we've traded the way through it, validated the order block, but we're right now at the open. We're sitting right at the open of that candle. So that's 73.80. So today, or this month rather, we've had 73.68. So we did trade down into the opening. On the weekly, okay, you can see that order block a little bit better in here. So that order block's open comes in at 72.90. 72.90 also takes us right down to the, real close to that would be supposed trend line support, which I don't have any faith in. But they may come down here and give them a little bit of a bounce. And then what I'll do is I would look for a selling scenario at this last up close candles low. And that would come in at 74.73. So if we get a little bit of a movement here, watch that level as a potential sell-off and then wipe out those individuals that are looking for continuation patterns, classic patterns, and uptrending trend lines for that. My interpretation of Aussie dollar is that we have a larger liquidity pool resting below these lows here. And I think personally that's where the market's going to draw to. Okay, so that's where the money is. Money's not on trend lines. Money's not on triangles on your charts. They're on levels and that are clearly noted. We had a response here. We came down. We didn't get to it. We had a nice response as well, but we did not go lower. I mean, we did not go higher, and we're rolling over lower. So we may be unable to get back up into this last up close candle coming in at 74.73. So 74.70 would be enough to put a short on should we get a little movement upwards rather, and then make a run for the liquidity resting below that 71.40 level here. And that, again, that's the low at 71.45. So 71.40 and 71 big figure, I think is where all the liquidity is resting. Okay, it would be interesting to see this. It would be nice to see it come down, wipe that out, and then start to rally. Then I think ultimately longer term, because everybody else will be spooked out of the market by then, they wouldn't consider looking to go long. But this, I think, is where we're going to be looking to see price go on the longer term for Aussie dollar. And let's extend that out a little bit more so we can see it on our daily chart when we go up to it or down to it, respectively, in difference of time. Good grief. There we are. So we have a daily. Fair value filled in beautifully, very nicely done last week. Had a nice response off of that. And now we're seeing some weakness again. So if we lose this low, the next logical area is, I'll ask you before you see it from me. Do you see it? This is for the folks that are watching the recording. Right there. There's your fair value gap below us. So should we lose this low, price will go down to, or could, let's say it that way. I don't want to talk too absolute. But the high is 72.41, so we could see 72.45, 72 big mid-figure, 72.50. And then we have the low on this candle because this only has been offered on buy side. Nothing has traded down to close or rebalance that upside movement. So we're always looking for price to rebalance in efficiency. And we don't have that yet, so it's going to want to do that if they will reach down and try to do that very thing. And the low on this candle is 72.77. So we see basically 72.75 to 72.40. Yeah, there's your fair value gap range. So that's where price would be reaching for this swing trade to short-term basis. Okay, so if we lose this low, any rallies, you can sell that and look for market to want to trade down to that level here. Now, in this pattern here, we outlined why price should come down to this candle's high and close in this gap. It did it, okay? But look how long it had to take to get there. You know, we rallied up, traded softer, traded up one more time, traded softer, traded up one more time, and then softer, all the way down and closing it. So it took some time to get there. That's not typical either. Usually it's like a real quick, that's what makes the low resistance liquidity runs what they are. Once they identify where the liquidity is, they go for it. And they've been building and building and building and building. That's why I think that this is more likely, because I'm looking at what they've done here. They built in a rather large sell position. They really sold off a lot. They built in positions here, here, here. Now they quickly ran away. So they're not going to want to give people a chance to get off the hook here. So anyone that's holding on to this as a long, they're going to be punished. And they're ultimately going to want to take price down to here. So that's a good ways, from where we're at now. Not a terrible amount of money in terms of pips, but if you're over leveraged, it's going to kill you. But I think that's where we're going to most likely reach for. Now, I don't see us going much beyond the fair value gap initially. I think eventually we'll have to rally again before we make the run below the lows that I outlined on that weekly chart. So we would have to look for, now watch, fair value gap that we just closed in. What do you think that's going to act as later on? Potential resistance. So we could trade lower, come down, close in this gap, and trade right back up into that gap. So remember where I taught you that markets trade from breaker to breaker, or like a turtle soup high to a turtle soup low? Those conditions you can frame the market in. Well, you can see that same phenomenon happening in the fair value gaps. One fair value gap to the other. Look and study price, and you'll see these things happen. You're going to, by the end of this mentorship, you're going to understand that whatever framework the market's working in, if they're reacting off of a stop run that makes the high, that's generally going to see a low formed with a stop run on the sell stops. So in other words, buy stops get taken, the market tops. It trades lower. How long does it keep going down? Until it runs a measure of opposing sell stops. If the move originates from a fair value gap, it's going to close that position or that swing off, usually with a fair value gap. Not always, but that's usually what I look for, that type of scenario. If we see a breaker cause the move, okay, from, say, a bearish breaker, we're looking to see the market sell off. I'm going to look for that move to continuously go lower until we see an opposing bullish breaker that encapsulates that move. And then I'm pretty much confident that the move is over then. Now, it does not give you the highest high and the lowest low when using breakers. Doesn't do it. But you can see it with turtle soup ideas where we see buy stops taken, rated, then the market goes lower. That's why we use that pattern. But it takes a lot of conviction to trade that pattern. I like it because I don't have a problem standing in front of price. It can be running up and I'll sell right into that, or going lower and I'll buy right into that. But it takes a lot of confidence and practice in doing it. But in between those two scenarios, turtle soup highs and turtle soup lows, the criteria is breakers and fair value gaps. So you can see how the markets move from one to another. And that's real support resistance. It's not like classical, I'm going to draw a line here and it should do this or that. We're seeing what price does. It draws into these levels, closes in those voids, rebalances price, and then once we've done this, now think about what's happening. Conceptually, if we lose this low here on Aussie dollar and we go below this fair value gap, convincingly lower, this is a completely rebalanced area in price. So it acts like that range, well-balanced range where we've seen price back and forth offered on the buy and sell side. So there's no reason for it to trade above that gap should it go higher because it's been rebalanced. Once we came down here, it's done. We've offered buy side here, and we offered sell side now here. So if we go lower and it trades back up into that range to find that fair value gap, let me draw it out so you can see it graphically and you have it in your charts as well. If we have price trade lower and come back up just to the bottom, it doesn't need to go up to the middle, it doesn't have to go all the way up here. It can just go to the bottom of the gap, okay? That would be an area for selling and look for it to trade down into this fair value gap. And that in itself is a setup that I like to work with. You'll see it a lot in price. It's there. Also, when you look at market maker sell profiles and buy profiles, you'll see that this actual setup is there a lot. And you work between one fair value gap to the next. Depending upon what time frame you're looking at, the fair value gap that would be seen here could be a liquidity void on another time frame. It's the same premise. You're looking for a rebalancing. Price only been offered on the buy side. We're always looking for it to rebalance with the sell side or down close or down movement through it. Okay, so we've only seen a buy-side delivery here on price. We'll be looking for price to rebalance and go lower down here. And lastly, we're going to look at Aussie CAD. Aussie CAD, listen to me. Dollar CAD. Okay, on a monthly basis, we came up, filled in our sell-side delivery here. I think, no, we might not have gotten all the way up to it. Let's see, the low is, the open is 38.14. Yeah, the low is 138.11. The high comes in, it just fell short of it. So we might still get it. But we're looking for price to rebalance all this sell-side delivery. And we have, again, that is at 138.11. So we're looking for that. We did have a little bit of response near the mean threshold, this down close candle right here. And yes, I know it, again, same scenario. We passed away from here, but look what we had here. This has been validated in classic terms with this candle. So on a monthly basis, this bullish order block, we've already seen a willingness to rally right around that mean threshold. So should this candles open on a monthly basis at 134.23, if we lose 134.23, we got some real problems for this uptrend. Okay, and they're probably going to want to reach for sell stops below the marketplace. And that's going to be a significant one because you have people drawing trend lines here, and they're going to want to take it back down here. And if it does that, then we have this gap to work with. And again, I don't see that yet, but nonetheless, everything still looks bullish for this pair until we get up to that 138.10 to 138.15 level. If we see expansion through that and willingness to drive through, then we're going to be looking over here for the fair value gap that exists right over there. So let's draw that in. And a little bit longer term, I'm confident that that's probably what we're going to look to see get traded up into. And let me give you some lipstick on here so you can see what those levels look like. Approximate 149.50s and $151.80s, I think, is a fair number. Should we trade through these bodies of these candles? I don't think the wick's going to be that much of a resistance factor. Again, it's like a void. We'll probably see longer term dollar CAD want to trade up into that level. The Canadian dollar as a whole is a futures contract. I was looking at it. It really doesn't look strong at all. It could really be trading a lot lower longer term, and I think this is even conservative. So we'll see what we see in terms of price action. But right now we're watching potentially for it to complete that the delivery of buy side because all this sell side has been offered already. We're going to drop down into a weekly. Okay, you can see how that lines up with a weekly order block as well. Let me adjust that. Up close, up close, up close. The last three up close candles. The low is exactly what we outlined on the weekly. So we're seeing potentially a continuation on the upside. So we were looking for a fair value gap last week. It got filled in. So we're looking for the close here, 145.80. I think that's a fair target also short term. So between now and not this Friday, next Friday, that could be a scenario that unfolds. Should we see upside as well for this currency pair? And yes, it's a pretty significant move. But once everything starts moving, this pair can really get excited. It's usually a very low volatility pair. But once they get this thing ripping, they're not going to give much of an opportunity to get on board. So be mindful that we're going to have to consider something at this level or just below or just above it. It can't be much more beyond that because once they start going, the range is going to be quick, they're going to be large, and we probably won't get any opportunity to do anything with it apart from that. Now, if we fail, say we trade up to that level here at 138.10, 138.15, and we fail and start to trade lower, that may be very problematic for this pair. And that means that everybody's expectations of it going higher, okay, will be wrong. And they'll be wanting to go lower. and they're going to make an aggressive move for sell-side liquidity. And that would be initially here, right below that low at January 29th low on $CAD. So that's where your sell-side liquidity is resting. On a longer-term basis, funds are below there, a little bit more aggressive, and weaker bulls, their sell stops are going to be resting below the low formed on April 9th, 2017. Okay, the daily, we rebalanced this morning. The range in here, the majority of it didn't quite get all up to the body. I would have rather seen that happen. But look at how much of a lack of gap. We had this high here. Price came all the way down, closed that in, rallied. So we have really an absence of any fair value gap close to us until you get down to here. It's a very small one. This low formed on the 24th of April. That low, we were a long wick candle, and then the high formed on April 18th candle. Very, very small little area in there, so that might not be enough to draw price. So if it's going down here, it's going to come down for the sell stops here, which would also close in a fair value gap that remains from this big candle. I'll outline that for you. You can have it in your chart. So you have our fair value gap really essentially there. You have this candle here is high, buy side delivery, sell side delivery stopped right there on this candle on the 13th of April, leaving that exposed area of only buy side inefficiently delivered. No sell sides been offered since then. So should we break down, and I'll say it like this, if we go down below the 30th of April's candle low, 36.36, so if we lose 36.30, we're probably going to make an attempt to trade lower. And we also have a small little tiny fair value gap that isn't, in my opinion, as significant as the one down here. Because if they come down here and try to close in this little area, here, they're not going to stop here. You might get a little bit of dead cat bounce and then ultimately run down here. But we're still focusing primarily for an attempt to get through here. This looks like, okay, I'm tired, and we sold off. We fell short by 7 pips from last week's objective. So real close in terms of what we were looking to see happen. That 138 big figure didn't hit, but we still could see it this week. So be mindful of that. And that's what I'm looking at right now. That's with a fresh perspective. These are the outlines for the pairs I'm following, what I'd be anticipating, and on a higher time frame basis, not looking at the lower time frames. So we'll be watching Tuesday's price action and how we close today to see which side of the marketplace we're going to be reaching for. And if there's something to do, we will certainly outline that. If there isn't, I'll be honest and tell you that there's probably nothing to work with right now, and we'll have to accept that. So you have 3 lessons coming to you this week. So check your outline for May content. You'll know what they are. And I'm going to escape here. Wish you all a very pleasant afternoon, and remind you I appreciate everything you've done in terms of allowing me the time to take care of what I had to take care of, family-wise. And I'll give you a recap later on today with more insights, and I'll have that post put up sometime this evening before 5 o'clock my time, so you guys can vote on what you want to do with the remainder of the mentorship. If you want additional time without having to pay for it, I'm willing to do that for you. But if you want to keep the schedule as it is, you'll also have that option as well to vote for. And I think that's fair. So I want to be democratic about it. So the majority rule is what we'll go with. And until I talk to you later on this afternoon, I wish you good luck and good trading.